Welcome traders, Maciej here from Taurus Trading. In this video you will learn about different types of bar in context of overall market picture, so stay tuned. While focusing on details is important, it is imperative to take a step back and see the bigger picture. It helps you understand where it is that you're heading and gives you a clearer vision of your goals. So first I would like to talk very briefly about what are the main categories and types of the bars. However, I got a special video dedicated to this topic, so you can check it out. I will leave a link in the description for you. So the main categories of bars are bull bar and a bear bar. By bull bar we can understand a bar with closing price higher than an opening price, so meaning that buyers are in control in a given time period. Opposite is true for a bear bar, which has a closing price lower than an opening price, and sellers are in control in this given time period. When it comes to different types of the bars, first I would like to talk about strong bull bar. It's a bar with closing price higher than opening price and has no tail on the top. Strong bear bar, on the other hand, is the bar with closing price lower than opening price and has no tail or so-called wick at the bottom of the bar. Now let's talk about weak bars. So weak bull bar obviously has the closing price higher than opening price, and on top of that has a large tail, indicating that buyers weren't very aggressive during the final stages of the bar. Weak bear bar has the closing price lower than opening price, also has a large tail on the bottom, indicating that when the bar was forming at the very end of this process, sellers simply gave up and were overwhelmed by buyers. We also have so-called doji bars. So doji bull bar has closing price higher than opening price and has a very small body and large tails both on the top and on the bottom, and the opposite is true for a doji bear bar, which obviously has closing price lower than opening price, has a small body as well, and same with tails. These are large tails on the bottom and on the top of the bar. Doji bar can be viewed as a one big trading range. So if you're looking at, let's say, 1 hour chart and you see that it has formed a doji bar, if you would zoom in to 5-minute chart, you'll most likely see a quite decent trading range, which means that most of the price action is concentrated in the middle of the range, and whenever price reaches the extremes, so upper and bottom part of the range, it's coming back inside the range. And finally we have a exhaustion bar. So exhaustion bull bar has closing price higher than opening price, and it's indicating a buying climax, meaning that buyers were panically buying, most likely during some news announcement. The exhaustion bear bar has the closing price lower than the opening price, and it means simply that there was a selling climax taking place during the time when the bar was forming. So as the title of this video indicates, it is very important to view all the types of bars in a context of a bigger picture. So here we have a clear uptrend. We don't need no indicators to tell that it's a uptrend, since we have a series of higher highs and higher lows. And as you can see, I've pointed out with blue arrows for you decent bear bars closing on their lows. They could be viewed as a very good entry bars for a short position. If the chart that you're trading is in a clear uptrend like this one, you simply should look only for buying opportunities and dismiss all the selling signals. The opposite is true for a downtrend. As you can see, again, I've pointed out with the blue arrows for you very good bull signal bars. Most likely a lot of beginners have entered long positions seeing these very good signal bars. However, they they were very quickly stopped out. Ignoring a bigger picture can cost you a lot of money, since as you can see from this example, there were multiple occasions when you could enter a long position during this downtrend just to be stopped out. So whenever you see a downtrend like this, only look for selling opportunities. And the last example I want to show you in this video is a so-called tight trending range, which means that market has no clear direction. It's just a mixture of highs and lows. Again, I have pointed out for you a very decent signal bars, both for long and short trades, and if you will take all of them, you will be probably losing all of the money that you've made in the last couple of weeks. So when you see a ranging markets like this one, it's better to stay out, or if you consider yourself a very good trader, you can look for quick scalps. In reality, overtrading can be many things, but one thing is certain: ignoring the potential we have to overtrade will almost surely put us in the position where we have overtraded, and by the time we wake up to this fact, our equity is gone. If you are a day trading beginner and you're looking for a chart with small time frame like 5-minute chart or 15-minute chart, and if you are not sure if the market is trending upwards or downwards, simply wait for a better setup. So like I said at the beginning, make sure to watch my previous video about different categories and types of bars. Also, it is very important to view all of them in a context of broader market picture. Thanks for watching this video. If you don't want to miss any new educational content that I'm about to put out every day, you might as well want to consider subscribing. Also, please check my website and grab a free copy of ebook that I've prepared regarding financial markets for beginners, and I hope to see you next time.